each individual country is working very hard in regards to its own domestic issues, in particular around going through a de-isolating process. And I think that's probably front of mind for most governments, and in particular, obviously, for most people in countries. So they won't be ignoring what's going on in Hong Kong at this stage in terms of the protests, but I think there's also some pretty significant issues for each individual country and economy to get over.
You're still expecting a V-shaped recovery. How do you then trade markets across the Asia-Pacific with that in mind?
Yeah, the V-shaped recovery is a view we've held for quite some time. Obviously, we're not expecting to see economic growth return to pre-COVID levels for a couple of years, but we do think there's a high level of pent-up demand that will surge into the second and third quarters of this year. And with a combination of economies starting to open up, that will probably drive very negative figures into modestly positive numbers going into that. It's really more a 2021 story. It's possible, and potentially in the case of China, it might be a W-shaped recovery, particularly, as I mentioned before, that we are seeing supply side outpacing demand quite significantly for the Chinese economy at this stage. But broadly speaking, for developed world economies, we do think there will be likely a V-shaped rebound, and to some extent it's driven and supported by clearly various stimulatory packages by governments and obviously central banks truly doing their bit. I think in comparison to the GFC, we've seen that basically the fiscal packages put out are basically almost twice the size of those packages put in place for the GFC. And from a central bank perspective, both in terms of cutting rates and their securities buying programs, it's almost 3 times the size of GFC. So quite clearly significant stimulatory support across the world. And that, to some extent, gives us some buffer in terms of a V-shaped recovery view.